MoneyMe has executed its largest ever personal loan asset-backed securities transaction at $365.4 million, bringing total issuance for 2026 to more than $1 billion. Let's get more detail. We're joined by MoneyMe Group Treasurer Nigel Bradshaw. Nigel, welcome to AusBiz. So this is a significant move for you. Obviously, gives you stronger funding capacity. What's prompted this?
Yeah, look, this is just the latest of our capital issuance. So, about 2 years ago, we came to market with our first personal loan ABS transaction, which was predominantly focused at domestic investors. We've been building our portfolio in that last couple of years, and so that's brought us back to market, needing to tap for new capital so we can continue growing.
All right. On the basis of that growth, what are you seeing? Given this is obviously strengthening your funding base and as well as lowering your cost of capital.
Yeah, absolutely right. So what we do is, the business model for us and also for other lenders like ourselves is that we are initially originating these loans into warehouse facilities with the banks. Those cost us more than the capital markets transactions, but they allow us to build up a portfolio of loans until we're ready to actually then bring them to market. So we already had this $365 million worth of loans on our balance sheet, but funded in warehouses with more expensive cost of funds. So what we're doing with the ABS transaction is actually now selling those assets into the capital markets, both domestic and international investors around the world, which lowers our cost of funds, allows us to improve what we call our risk-adjusted NIM, or RNIM, which is a key metric for the business, and also refreshes the capacity in those warehouses so that we can grow the next $365 million worth of loans.
Nigel, is this the trend we're seeing now, particularly among fintechs such as your own, MoneyMe, that lenders using securitization essentially to scale?
Absolutely, and this is something that really is a sign of scale and longevity and resilience within a business model, is that ability to continue building out and expanding the investor base. So we've invested heavily over the last couple of years in building out those relationships, and we've spent time in Asia, in Europe, and the UK particularly, and spending time with investors, introducing them to the MoneyMe story. That's been in a backdrop of a very strong Australian macro climate. And so, the world is really looking to Australia for generating, stable and high-performing quality assets. And MoneyMe is one of those who's taking advantage.
And in a further vote of confidence, I gather the transaction was oversubscribed by both domestic and offshore investors.
Yeah, and that was really pleasing to see. We go through a book build process. So when we actually mandate a transaction through to pricing it, usually that process takes a couple of weeks. And we're talking through the investors and looking to see who is, in particular interested in the collateral we've got, the pricing we've got, how it compares relative to other assets that they can choose, either in different jurisdictions or different asset classes. And in this particular case, a lot of that work we've done building those relationships and that track record with investors really paid off, because we had significant oversubscription, and the limitation on the deal size, or if you like, the 365 million was the pool of assets that we had available to sell. If we had had a bigger pool to sell in personal loans, we could have actually done an even bigger deal as well.
So this is obviously satisfying your desire to scale, as you said, also seeing that the growth opportunities, in particular, what part of your portfolio are you servicing perhaps?
Yeah, so we've had our two main growth drivers for the last few years have been in auto loans, and then now more recently in personal loans as well. So whereas in the past we have done other previous personal loan ABS transactions, but the maximum size we've done is just over 200 million, because we just weren't originating enough assets. So this flow-on effect of the cheaper cost of capital, releasing the capacity, increasing the scale and the investor base, is what's allowed us to have the confidence to really grow the book and start to take advantage of the scale opportunity that we have in our platform. So that's personal loans have been really making a big comeback and growing well as well with auto loans. And the next big one for us is our credit cards. We've recently launched a blockbuster credit card product, which has received some rave reviews from the market. And so that's early stages, but that's the next one which we'll be looking to bring to ABS markets in time as we build up a portfolio there. So we'll have 3 different funding programs running. We'll have our auto ABS trades, we'll have our personal loan ABS trades, and then also our credit card personal loan, our credit card ABS trades as well.
Nigel, I note that your Chief Executive Clayton Howes has said this essentially reflects the ongoing strategy of targeting high credit quality borrower segment. Do you actually have any concerns at the moment, given where the economy is tracking in terms of credit quality, the rising cost of living, rising interest rates and the like?
Look, it's something that we're always very focused on, because as important as the ability to generate capital and to collect on your return is to actually make the right loan in the first place. So we have a very granular risk-based pricing model that allows us to ensure that we are getting rewarded appropriately for the risk that we're taking on every loan. When we look at the broader economy, you're right, we have some cost of living pressures, inflation, an RBA that's now hiking and expected to potentially hike further in the cycle. We're actually being seen by investors as an excellent opportunity here because one, personal loans and consumer finance through auto loans actually have a higher, risk-adjusted NIM relative to a mortgage, and so we're seen as a good diversification play there. And we also have shorter term loans. So rather than 30-year loans where there's exposure for obviously a long period of time with home loans, our loans are typically 5, in some cases 7 years. And so investors are not having to wait as long, and we're not either, to get that capital back and to recycle it into new business. So we're very comfortable with our credit settings. We're very comfortable with our pricing and our model. And so we actually are seeing investors, backing us with that confidence that even in this cycle, where with the budget last week, we saw potential implications around particularly investment property, share investments. They're seeing asset-backed securitization in the consumer ABS segment as a really great relative value investment right now.